Okay, so gold is finally approaching a very interesting zone for a potential trading opportunity. Now, in fact, what we have on the monthly time frame is a market that is approaching and has approached this level here, which was extremely strong resistance, again, extremely strong resistance, very strong resistance again, preceding all this huge move to the downside. And now, again, the market is exactly inside of this area, and we can expect a reaction from the zone. If we go down on the weekly, what kind of situation we can see? Now, on the weekly time frame, we have a market that has created a higher high. Now, if you want informations on a new impulse and a higher high in the market, what are you supposed to be doing? Taking your Fibonacci on the previous leg. So in this case, on the move to the downside. And what you can see that the market is approaching and has almost hit the minus 27, which is the upside target for gold. So we're waiting for the market to reach the minus 27, that exactly as we usually expect lines up pretty nicely with the resistance that we had already identified on the monthly time frame. Let's go down on the daily and see what kind of situation we have. Now, on the daily time frame, what we can see. Now, first of all, let's keep the charts clean, identify our resistance, and just delete the minus 27. So we know that we have resistance around this area, both on the monthly and weekly time frame from a Fibonacci perspective, and we expect a reaction to the zone. We know that the market currently has created the fifth wave to the upside. We have we have 1, 2, 3, 4, 5, and from the fifth leg, we expect the market to show us a break back to the downside. But before I show you how we will be approaching this situation with students, let's go and see what we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing on gold. Now, what we can see is that we have seen a clear increase in the net positions from 208K all the way up to 251K, with longs reaching 308K and shorts reaching 56K. So with the last reports, we have seen proper adding of longs. First 13K longs added, another 31K longs added with the last report. So before we can be even thinking about looking for shorts, we first need to see clear shorts adding or clear longs closing, because if you're closing a long, you're actually shorting. So we need to see them at least take their profits on these longs. So what do we have to wait for? Well, we know very well that here we have structure, okay? You know that here we have the previous resistance, which is now turned support. Now, until the market will remain above this area, the market can and should continue to the upside and respect the area as support. However, if the market will actually manage, because hedge funds start closing their longs and adding shorts, if for some reason the market will actually manage to break back below this previous resistance, which is now support, this level will be turned again resistance. And on the retracement back to the level at that point, that is where we will have good probabilities and good risk to rewards. And this is where we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries for the move to the downside and a deeper retracement from a monthly perspective and shift away from the area that I showed you at the beginning of the video. But first, we need to see a clear impulse to the downside on the daily with a daily close below the area. Until that will happen, the market can and should easily continue to the upside. We need to see the break before we can even start considering a short on gold. So we won't add it on watch list with students until we will see a clear break. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.